If you want deals, make sure to check out the programs on Building Your Wealth, linked down below. We analyze real estate deals almost every time we go live, in addition to stock fundamental analysis. And the reason we do this is to teach you how to make money in real estate as well. Use that coupon code FIREWORKS to get in before the price goes up. Hey everyone, meetkevin here. Wouldn't you think going into a crash it would be smart to deleverage, to take on less debt, especially if housing is going to have or face a correction? Wouldn't you think that maybe people would want less risk? Well, folks, that's not what's happening. In a chart that's quite reminiscent of the great financial crisis of 2008, take a look at this. We've got mortgage equity withdrawal now at the highest level in Q1 of 2022 since the Great Recession. Folks, I don't want to compare anything to the Great Recession, let alone people taking on more debt, especially since even the Federal Reserve is telling us that it looks like there's a growing concern that U.S. housing prices are again becoming unhinged from fundamentals. And at the same time, home builder Lennar, the second largest home builder in the United States, tells us that they're seeing three categories of pain in their markets, from flattening purchasing power as category 1 to targeted price reductions and aggressive financing programs, great, another 2008 reference, in category 2, and of course more significant market softening and correction as a category 3 of market declines occurring. All of this at the same time as home sales are falling, and we're seeing a substantial decrease in the number of buyers on the market. Folks, the housing market is beginning to shift. But don't take all of what I just said for a sign that the housing market is beginning to shift. Let's take a look at two very important things. Two important things start with this here. This is a chart that shows us the number of buyers that backed out of deals or canceled deals. And if we compare this to the last 5 years, we can see the buyer cancellation rate right now is nearly as high as what we saw in April of 2020. And we're at the highest point of cancellations since then. This is a sign that home buyers are starting to potentially get cold feet that, oh my gosh, maybe prices will stagnate and maybe prices will come down. Now, why do we think that prices will stagnate? Well, it's mostly because of interest rates. This is the chart of the 10-year Treasury, and it shows us interest rates skyrocketing year to date. This is the year-to-date chart, and as long as the 10-year Treasury remains in this range over here, which is between 3 to 4%, 3 to 3.5%, we could really be expecting average mortgage rates in the neighborhood of 5.75 to 6.5%. And the problem with that range is it is 3 to 3.75% higher than what we saw in December. And unfortunately, that could lead to a reduction in buyer purchasing power of between 30 to 37.5%. Now, that doesn't mean that real estate will fall that much, because we still have an excessive amount of demand and a lack of inventory. But folks, we are starting to see a shift in active listings and a lack of that demand. But quick note, if you want help analyzing real estate deals, or you want to learn how to properly renovate your properties, you want to actually learn how to build real wealth and long-term investments in real estate, you want to go from zero to millionaire, then come join the programs on Building Your Wealth with Real Estate. These aren't get-rich-quick programs. These are my ability to educate you in absolutely everything that not only I know, but my family knows about real estate investing from over 35 years in property management, investing in single families, multifamilies, you name it. We've got experience in all sorts of different aspects of real estate, and we could teach you a way to not only save thousands of dollars on real estate, but to potentially make hundreds of thousands of dollars in investing appropriately in real estate. And we've got a great opportunity to buy real estate coming up, in our opinion, towards the end of this year and beginning of next year. You just want to be educated. So make sure you use that expiring coupon code linked down below and take advantage of joining the programs on Building Your Wealth. So what's the latest Redfin is telling us? Well, it's not great. In terms of all markets throughout the United States, The percentage of active listings with price drops has again inflected up. And if we go into some individual markets, we could see Austin, Texas is now above 10% price drops. Seattle's above 10% price drops. Tampa is above 10% price drops. Boise, Idaho is above 16%. Folks, the inflection points are here. The recipe for price drops leading to lower sales prices is here. This is the time to be cautious about real estate. If you can negotiate a great deal, do it. But my suggestion is clear. Right now, you should be focused on paying down debt. Pay this down so that way you decrease your debt to income. One of the things that we talk about in the real estate investing courses is that every dollar of monthly debt you have reduces your purchasing power by a monthly figure of $2.34. So for example, if you have $1,000 in debts, you lose purchasing power worth $2,340 per month for a home. This is a pretty decent mortgage here that could afford a very nice home, but $1,000 of debt could make that almost impossible. After you pay down debt, make sure you are saving. Save what you can. If you're going to ride the market in the stock market, hoping for an upswing, fine. But no matter what you do, whether it's riding the stock market or riding in cash, get your wealth set. Put aside a war chest so that way you can get prepared to buy deals. But also remember to get yourself educated. You got to build the connections. You got to know how to build the connections in real estate. You got to know where the deals are going to come from, and you got to prepare. And once you're educated and you're prepared and you know how to invest in real estate, you'll be able to strike on those wedge deals. And you'll be able to build your wealth, become that millionaire. Check out the programs, link down below.